everybody. This is Sarah Savard with the Franklin team, and I wanted to introduce you to Jennifer Hernandez with Legacy Mutual. She has been in the business since 1995 and closed almost 4,000 homes, or 4,000 loans, I guess. She is one of the Franklin team's preferred lenders, and I wanted to have her here today to kind of give us an update on what's going on in the market with this COVID-19 and all the different loan changes that seem to happen every day. So Jen, you want to say hello?
Yeah, hey, thank you. Thanks for having me. So first of all, my contact info is the same as what's on the screen, Loan with Jen. That's my website. It's all the handles for all my social media. So you can just type in loanwithjen.com and you'll get to me, contact info. Thanks for having me on. So really, Sarah, the lending changes that I think is the most important for buyers and sellers to know about. Credit is tightening. The reason is because lenders are afraid. It's out of fear. They're afraid about future buybacks, future default, future forbearance. They're afraid they're going to do loans and people immediately are going to want to get into forbearance because they can't make their payment. So it's constricting and it's a lot stricter. So FHA loans, which is very popular with homes in people with lesser credit, more tainted credit. So the credit requirements for FHA has increased. There are some companies that are 620, but most everybody's 640. There is no sub 620. No one is doing it. It used to go down to 580. So now I don't know anyone that's doing that. So let's just say 640 is the credit minimum requirement for FHA. If they're getting down payment assistance, there is still down payment assistance. It will go down to 620. But remember that if you are looking for down payment assistance, there are income guidelines. So in the Harris County, Houston and surrounding areas, your income has to be below 76,300. So whoever's applying for the loan, if it's just one person can make up to 76.3. If there's two people, their joint income cannot exceed that. Okay, so that's super important. Otherwise, there's no down payment assistance. And so less people are qualifying because there is a certain amount of people that had lower credit than 620 and they were expecting to buy a house. Okay, so that's number one. The second thing is I'll hop over to conventional loans. Conventional loans go up to 510,400. So the limit did increase a few months ago. So that's great. On almost all of the loans, we are now finding that the maximum debt to income ratio that the automated system is accepting is 45%. It doesn't matter their down payment. I had a guy the other day and he was putting 50% down and his debt to income, the computer just would not take it above 45% debt to income. So what that means is that in the past, we could go up to 50% debt to income. So for every gross dollar that you earned, up to 50 cents could go to debt, which is pretty lenient if you ask me.
Sure.
So now everything is contracting no matter how much you put down. And it's even more strict for people putting 3 and 5% down. So if you are a buyer or a seller going to buy another house that, you're looking for a low down payment, just make sure that, you get pre-qualified as soon as you can. Credit requirements are the same on these kinds of loans, but that debt to income restriction has been kind of a big deal. So what we're finding and what I think sellers need to be aware of is that there's just less home buyers out there because of number one, job loss. Mm-hmm. Number two, constriction of guidelines, whether it's credit or debt to income ratio. Okay, so those people will probably need to rent or, they might be able to get a co-signer, but so the market is shifting. I think you should expect that more buyers are going to ask for closing costs. I know that we're advising buyers like, hey, get with your buyer's agent, talk to, we don't know who the seller is yet. So depending on the seller and what their needs are, try to submit your offers negotiating XYZ amount in closing costs. So we help them figure out what they need in the beginning to make their cash to close work. And it's not going to work with every seller. You know,
Yeah, and our sellers are going to have to be a lot more flexible and accommodating in the months, year at least, probably, I would say, on closing costs. And that's just something that, because there's going to be less buyers, are going to have to do. So I was going to ask you, jumbo loan. Tell me, because I know that's a lot of big changes happening in the last couple of weeks on those. So can you give us any?
Yeah, jumbo has really changed a lot. We are really not, Legacy Mutual Mortgage is not doing any right now. We have one outlet for it, but it's just not strong. So we're suggesting people to go to the more local regional banks, like in Houston, in our area, you know, like Houston, Amegy, Community Bank, Independent Bank, Prosperity Bank, Regions Bank, Cadence. Those probably for the near future are going to fill that market void. So those loans are still available. It's just that money, it's more scarce, because if I'm a lender and I'm going to lose my shirt on someone that goes into forbearance, I'd rather it be on someone with a $200,000 loan than someone with $1 million loan. A lot of lenders are just like, we just want it to be way over here. We're just not going to do it right now. It's going to come back. I don't know when, but for right now. And so actually something creative that we're doing with a lot of buyers that are, you know, in that 600 to 800, even 900 price range, is we can do a split loan. So we'll do, I'm about to quote someone who's a 700 purchase price. She wants to put 5% down. So we're going to do a first loan at the 510, 400, and then we'll just do a second lien right behind it. So a first and second lien combination can get us into that conforming loan amount and still have a low down payment. Once you get over 900, it becomes really hard to do that first and second. And that's where I would say, you know, go to Amegy or go to, you know, some of those other banks. But there's a lot of creative things that can be done. So, I mean, don't give up hope in those price ranges, for sure.
Yeah. Okay. Yeah. Good. Well, good. Well, I think that's a lot of good info. I appreciate it. And I hope anybody listening, if they, you know, are in the market in the future to buy or sell, they contact myself or our team at the Franklin team, and we'll have our info below. And then obviously Loan with Jen, reach out to her, all of her handles. And Jennifer Hernandez, she's awesome. She's done lots of clients of ours. So appreciate your time today.
Yeah, you got it. Thanks.
Thanks.